If you own or follow Digital Turbine, which trades under the ticker APS, you will have seen the massive drop in price after its earnings release on the 2nd of November. The stock dropped 19%, a fifth of its value was wiped in just one day. Now, the question on everyone's mind is this: is Digital Turbine a sinking ship or an amazing opportunity at a discount? If you want to find out more, smash that like button and stick around. First of all, let's look at the earnings report. Compared to last year, Digital Turbine's revenue was up an astonishing 338% to $310.2 million, while non-GAAP net income rose 212% to $45.3 million. Compared to expectations, Digital Turbine over-delivered by $0.05 or 12.8% with an EPS of $0.44. Digital Turbine's revenue was just slightly above expectations, just over 1% at $310.2 million as I mentioned earlier. So, what about management expectations and guidance? Well, Digital Turbine expects a revenue of $350 to $355 million next quarter, which is above the expectations of $340.7 million, a roughly 300% increase year on year. Digital Turbine's expected EPS is $0.41 to $0.44, which is a 105% increase compared to last year. So, it looks like Digital Turbine did amazing. Great earnings, great revenue, decent guidance. Why did it fall then by 20%? What caused investors to sell off that much? I've looked all over and this is the reason. There's no obvious reason. The company's GAAP profits did fall, which is what a lot of analysts are pointing towards, but that's normal for a growing tech company. If we look at the free cash flow, which is a more reliable metric of how the company is performing, Digital Turbine does well. Their free cash flow increased 44% as compared to last year to $30.7 million this quarter. So, what's causing the drop? My bet is one of three things, or maybe a mixture of all three. One, there is a lot of systematic risk in the market. There is a lot of fear around inflation, tapering of bond purchases, potential interest rate hikes. Two, if we take a look at the chart, we can see that Digital Turbine jumped massively last month, while most of the market was down. It's likely that speculators built up a big position in the stock because they were betting on better than expected news. That's happened so many times this year. 3. Something else may have happened that we still don't know about. It could even be a scenario like Bill Huang and Baidu. A major hedge fund could have pulled out, some funds could have exited, maybe some management staff sold some stock. Who knows? We'll probably find out for certain in a few months. At the earnings call, the CEO mentioned several things. First of all, Digital Turbine achieved a record high free cash flow like we saw earlier. Digital Turbine also has lots of big customers like Starbucks, McDonald's, Procter & Gamble, Nestle, BP, which continue to expand their business with the company, and that's one of the factors that helps Digital Turbine produce such massive growth. Then we also have a new deal of Digital Turbine with AT&T and Verizon, both of which are expected to bring roughly $35 million in revenue every single quarter. Essentially, all of Digital Turbine's business segments are showing tremendous growth, and Digital Turbine now has software installed on over 750 million devices. The company is also shifting away from monetizing only on the first boot to monetizing throughout the lifetime of the device that its software is installed on. Obviously, that's a massive revenue booster at a relatively low cost. Digital Turbine's single-tap business is also rapidly growing from millions of revenue last year to hundreds of millions of revenue this year, which is amazing and great to see. The only negative part the Digital Turbine's CEO mentioned was the new Apple privacy update, but there's a silver lining to it. Only a small proportion of Digital Turbine's business is affected, so the overall impact on its revenue should be very small. Overall, the earnings call was relatively positive in my opinion. So, what happens now? Based on what I've seen in the market so far, I'm expecting that the price will trend down a bit lower over the next few weeks. We did not see an immediate bounce back after the sell-off, which is telling me that people are cautious, maybe even scared. Digital Turbine is a hyper-growth stock, so maybe the expectations for the stock were higher and investors want to see results before reinvesting. It's typical for growth stocks to experience a drop once they slow down, like we can see with Peloton. but it does not look like Digital Turbine is putting on the brakes anytime soon. Still, the stock could go down all the way to $66, which is the previous resistance level, or even worse, down to $48 or $49, although I think the likelihood of that is very tiny. Personally, I'm thinking of starting a small position and adding a bit to it every 2 weeks over the next 2 months. Digital Turbine is a great company with superb positioning, and I believe that it will be a great pick over the long term. What do you think? Is this a great time to buy the dip with Digital Turbine, or is it best to keep a distance and see what happens? Let me know in the comments below. If this is your first time here, please like, subscribe and share the video to share the love. It really helps the channel. Thank you for watching, and I will talk to you again soon.